If you're a realistic Bitcoin bull like me, then we are at the start of something absolutely beautiful. Let's take a look at this on this chart today. Bitcoin managed to fake out above the 52, 53K level very, very briefly just yesterday. And ever since then, we had one little retest down here. And we did exactly what I was warning you guys about in the last video. I want to give a very quick shout out to those of you that are smashing those likes up and subscribe to this YouTube channel, because one of the key ideas that I discussed with you in yesterday's video is that if we produce a dump and then our subsequent bounce is short-lived. Let's take a look at this. How long did it take to get back here? 17 hours. So you tell me, is that short-lived? If we produce a bounce and it's actually short-lived, well, that can be a strong sign that the market is actually pretty weak, okay? Because if the bounce was strong, if we actually had good strength in the market, then we shouldn't have been able to drop that quickly again, right? When we get a bounce, instead, I would expect it to look a little bit more like this, or a little bit more like this in a healthier market, where if we take a look at this, 17 hours after the move, Bitcoin's price was still, a good, well, it was only 1%, this is a tight range, but still a good $500 above, compared to, even hundreds of dollars below, and we can see this over here as well. If we kind of trace this forward 17 hours, just, as a rough random number, we're up by $1,000 as opposed to down by less, down to an even lower price level. And I think that's a really important way to kind of read between the lines and really understand the nuance of this market, because if you can do that, that's actually going to make you a lot of money, and most importantly, it might actually save you from losing a lot of money. And so what we're doing right now is we're showing another sign of weakness which we weren't showing before, which is we're coming down to an area of support, and instead of getting these quick bounces, we're now actually just stuck down here. Okay, so previously we were able to muster a recovery, and we were able to keep that recovery even back here just yesterday. Today, we're not able to even make a recovery. So maybe we get a little bit of a bounce up, but actually all of this is actually starting to rhyme a lot for me on a much more different, on a very different, but still completely, how do I say, a reasonable time frame, something which is very reasonable to compare. It's reminding me of back here at the 2018 very, very famous macro $6,000 bottom, where we were originally setting a nice big recovery off our support level. But then take a look at this, right? We managed to bounce off on the daily chart. We managed to bounce off basically within less than a day, if you count just this wick. Over here, it took us about 13 days to get the bounce. And over here, it then took us about 34 days to get the bounce. Here, it was about 16, so generally getting longer. And here, it took us 66 days, and we still did not get the bounce. And that's where the tumble down started, okay? And I actually went short down here, made 60% profit, went long over here, and made, at that point, one of the biggest profits of my life. It was like, I didn't actually trade it that high. I only traded it like up to here, and that was like a 360% profit. Obviously, my current position puts that all in the dust. We're now at like we were at 1,400% profit just a matter of hours ago, which was absolutely fantastic. So that's absolutely beautiful, just kind of getting a sense of these things. And by the way, you see it on the reverse side too, right? I mean, you take a look at this right here. It's so obvious. These kind of things, they play out all the time. Previously, we were getting pretty quick rejections off this level, and then over here, if we just kind of take this box of price action, Bitcoin actually managed to stay up at this resistance box for a period of 17 days. Now, previously, we got shot down after 2 days over there. If I just draw these again, we got shot down after 2 days here, after less than 1 day, after a few days, after 2 days over here, after a couple of days here. This one on a slightly more, and obviously we're exaggerating the scale a little bit because we're drawing a box, but this one definitely took longer, which was a key indication that actually resistance isn't working anymore. And on the flip side, what this means for today's price action could certainly be that support isn't working anymore. Okay, so that gives us a very, very healthy bit of price action to analyze. And by the way, I want to hit you guys with something. Here is surprise, spontaneous SBF. Let me bring this up right here on the SEC website. Bam, take a look at this if you guys haven't seen it. This is SBF's first official, I think, picture of him in jail in Brooklyn. He has not been sentenced yet. He's actually going to be sentenced next month. Next month, almost in exactly a month, I think. But there's a boy right there, stood next to, he has a nickname. Apparently no one knows his real name, and a bunch of other dudes. So there you go. It's happening. And if we come back to the price action here, What we've got right now, I think potentially is a pretty clear sign that, we've tested the upside quite a bit. We're just not able to crack it. Now we're testing the downside. And, you can't really say that we're more bearish than we are bullish. We actually spent a lot more time on the upside here, but then it kind of raises the question of, well, if we spent so much time up at resistance, why didn't we break it, right? Especially, if we look at a chart that I actually pulled up for you guys yesterday in last night's video, one of the points that I made for you guys right here was that Bitcoin doesn't actually have anything particularly concerning in terms of resistance at this current price level. If we take a look at this gap right here on the VPVR, one thing is very clear, which is that if we just trace this price action up to our current level, like there is no resistance here on a macro time frame, yet we're still struggling. It's actually more like the 53K level, but still not a whole lot of resistance, right? And so you would definitely want to see that the price can pump, but we're just not really producing that pump, and that's obviously one of the key signs that things are starting to sour for Bitcoin a little bit. If we take a look at this from this perspective here, we've got a beautiful range of support down in the $50,000 price range and up at the $52,000 price range, and this is definitely starting to shape up to be a kind of sideways consolidation range, which is also another idea that we discussed on this YouTube channel. And all of these things are absolutely beautiful because they make for really good, safe trading opportunities, and I think that's what this market has given us in these recent days in terms of kind of resistance at resistance and fake outs, which are obviously Bitcoin's love language. Bitcoin having deviations as its love language, which is absolutely fantastic. And of course, if you guys go ahead and actually check out, I'll show this to you in just a sec, our most recent video, or really just this video or whatever, if you look in the description, you are going to see this link to a free $500 Bitcoin position on Bybit, which is absolutely fantastic. So if you're not already signed up, just sign up using this link. And if you are, you can transfer under me. If you haven't been referred to Bybit by anybody else, and if you have been referred to Bybit by anyone else, you're going to have to make a new account and submit the same KYC again or a different document. That's totally cool. You're going to get a free $500 position to trade Bitcoin with, which is absolutely fantastic. You can send it long, you can send it short, you can do whatever the fuck you like, and any profits that you generate are totally yours to keep. Deepcoin doing something also which is very similar. This is a no KYC exchange, giving you over 100K in bonuses and doubling your $100 deposit when you just make a trade worth 10K or a few trades or however many that kind of add up to 10K, which is absolutely fantastic. This is a very quick, easy number to hit for anybody, especially with leverage, which is what you'd be using this exchange for. So that is super, super cool. Obviously, leverage is not for everybody, but if that's what you do, then more ammunition to throw into your trading pot is never a bad thing. So definitely check these beautiful offers out while they are available. Obviously, the Solana one expired, but this Bitcoin one is something that I was able to get for you guys, so please do take advantage of that while you can. This one, actually, if we do open up the link, I'm not going to do it now, but you'll see that it's not actually it's not time based. It's going to end when people take it. So just make sure that you are getting your spot as well before it ends. Now, if we continue on with the analysis and take a bit of a closer look at where this thing could go, here's a beautiful chart to take into account coming off our low down in the kind of 39K range, just kind of when we had that correction. We've got some really nice support for Bitcoin building that has built up around the kind of $48,000 area. For me, this is a bit of a stretch, and I think that if we are going to lose this level, we are probably going to be dropping a lot lower. You can kind of see that area visualized with this red line right here. It's a level that we've known of, and it's cool. It is an important level. If we zoom out onto the daily, we can definitely see that this was a clear high for Bitcoin during our previous bear market of 2022. So naturally, yeah, I think it's fairly reasonable to expect that this could be a potential bounce zone for Bitcoin. For me personally, because of the kind of quick run up we had and the lack of resistance, we did find resistance. You can see that there was some candles wicking up here and obviously a candle open close right here. So there was definitely some interaction with this price level, but for me, mainly because of the big run up, I'm not so optimistic about this, and I actually think that we're going to be looking at a deeper tumble down toward that $44,000 price level. And I'd love to start seeing some fear. I'd love to start seeing some people getting a little bit worried about the market, starting to feel like things are going to turn very, very bad. Obviously, we're going to be keeping a close eye on that fear and greed index because, well, I don't even know how we're at extreme greed, but this I'm gonna have to question this this rating today. I mean, this is the first time I've ever questioned it, I think, or like one of the first for sure. But 78 I think is a little bit too aggressive. But bottom line, if it wasn't 78, it'll still be like 72 probably, and 72 is still too high. I mean, you don't want to see such high fear and greed numbers. It's just across the board always been the case. When you get like long periods of like extreme greed, for example, if you take a look at this, like February of 2021, it always, ladies and gents, always lines up with major market tops. Here was February of 2021. I mean, we've got to reset it. We always have to reset it. If we take a look at this price action here, what was the all-time high? You'll always see it's always set during extreme greed situations. That was November of 2021. So what was that? That was like, yeah, right here, right? So it always comes back down, and we're not as high as we were before, obviously in the 80s and 90s, but we're certainly close, and I don't know if that's completely warranted just yet. So that's not something I want to see us keeping. And if we are able to kind of reset that a little bit with a nice healthy correction, then that would be fantastic. Obviously, one of the nicest things to get in this case would be that we kind of initiate the drop. Maybe we get that bounce off 48, and we come back here for that kind of kiss of death, and then continue to move down. The reason this would be great is because, well, first of all, it's a really nice entry for a trade, which would be really nice. But it's also because if we end up coming back here, like regardless of how low we drop, maybe we come down here and then we move up, or maybe just a little bit, it does give the bulls an opportunity to seize control back of the market. And it's probably not going to happen, but it does mean that there's temporarily a bit of selling pressure alleviating, and then showing us that actually people are too bearish to let the price rise up again because they want to get out of their position. And obviously that's because most people are in a profit on Bitcoin now. So naturally, obviously, the smart people are going to be wanting to take some profits. And it's not to say you're dumb if you don't want to take profits, but if you're not the kind of guy that takes profits, then you're probably not the kind of guy that makes profit. It just tends to go that way. I don't make the rules, don't shoot the messenger. And so, because of that, I think there are going to be some people kind of looking to take some profits up here. And if that does happen, then potentially a nicer, deeper tumble a little bit lower. And obviously all of that, like I said at the very beginning of the video, this looks beautiful because it enables us to continue this uptrend in a healthier way for a longer period of time, and continue to get that nice ascension on our capital there, which would be absolutely fantastic, right? I mean, the more crazy our price action is, the more crazy it is in the opposite direction too. So, generally you want to have things a little bit more tame, a little bit more sensible. It's still crypto. It's still going to make us a lot of money. But, we want to see a nice kind of steady climb with some nice pullbacks as well. And that is what Bitcoin looks like it's trying to produce right now. I mean, this is in and of itself, this daily candle right now, by the way. I mean, we do have a solid 5.5 hours left on this candle, right? So anything can happen still. That is a quarter of the day. However, just in this one candle, this is why I think it's actually a really big deal. We have eclipsed the previous 6 days of price action. Okay, so that the previous 6 days of price action are completely shadowed by this 1 day of price action. And that's a big deal, because what it means in terms of momentum is that, or just in terms of, reading between the lines price action, is that within 1 day of price action, we are erasing the progress, we are erasing the journey that we've had over the last 6 days. And that basically tells us that the market is gaining strength in a particular direction right now. More importantly, the market is gaining conviction. The market is gaining confidence in a particular direction right now. And that's actually often how these kind of things tend to play out. When you get these major engulfing candles, big things tend to happen. We've seen this on the weekly chart a lot. We've actually discussed it a lot on this YouTube channel. Let's see if I can find you a very quick example. Here's an example right here. It's not a great example, but it's definitely a good one. This one weekly candle engulfing the previous two weekly candles, and obviously it's the start of a very, very big run. If we take a look at here's another weekly engulfing candle engulfing the previous 1, 2, definitely these last 3, and potentially even further if you don't count these lows. And obviously this was the start of a continued run, which did pause for a little bit, but it did keep that uptrend. So we tend to see it a lot. Here was another one right at the very, very bottom. This one weekly candle engulfing the previous, what was this, the high 18.3, and the high here was, what am I looking at, 17. Oh right, no, the close. I'm looking for the close. 16.7. Yeah, so this candle did close higher. Yeah, we can see it visually as well. This candle did close higher than the previous 4 candles, what was this, 3 candles? Was it 4? One sec, I'm tripping now a little bit. It was 4. It did eclipse the previous 4 candles on the weekly time frame, and of course it was the beginning of a massive move up. So don't sleep on these engulfing candles, ladies and gents. This is actually like one of the most Like people really, and by the way, this is one of the reasons that I take my approach in these markets. Those of you that are in VIP or that have taken my Fourth Lies Academy course, all of which you can find linked down below right here. One of the things that you'll see is I keep things so fucking painfully simple, and they're oftentimes things that you already learned but maybe brushed through quickly when you were learning how to trade, or whatever the case may be, or maybe you just kind of skipped it altogether, or maybe you learned it and stopped paying attention to these kind of things. But these basics, I remember, let me give you story time for a second, ladies and gents. Smash up the likes and let me know if you like this in the comment section. Tell me you like the story time stuff. I remember years ago, I was 17 years old when I met Tone Vays, and me being 17 means I had been trading for 2 years. I started when I was 15. So I already knew what I was doing. I was pretty for 17. Yeah, I was pretty good. I think I was good. I was happy with my performance. I was happy with how I was doing, and I went to Tone Vays' his financial summit, or it was a trading workshop. It was a trading workshop in Amsterdam. I met Daisy. Shout out to the whole team. Fucking love you guys. They were running a little trading workshop, and I remember attending just because I wanted to make more money. I wanted to get deeper into the game. Tone Vays is a fucking legend in the trading space. And I went there, and I swear, I was like, this shit is too simple. Like, it was like, there was one day where it was just a lesson. We were sitting in a room with a like interactive board, and he was like showing us what a fucking candle was. And I was like, are you serious? I took the Eurostar. I was like, did I really take the Eurostar to Amsterdam, bring my dad with me because I was underage, and I was, I don't know, for some reason scared. Looking back, there was no reason for me to take my dad, although it's cool. I love traveling with my dad. I was like, did I really come here just for a fucking candle workshop? And he went through all the basics, including, of course, things like engulfing candles. And I was like, I literally learned this as the first thing that I did as a trader, as an analyst, was I learned this. And in books I've read, this is the first thing that you go through. I was like, well, why are we going through this again? This is a waste of time, whatever. And I was a little bit more naive back then, so I didn't question it that much. I was just kind of going with the flow. But what I noticed immediately afterwards was that because I went through it all with a phenomenal teacher, even though I kind of learned the same stuff again, just kind of going over that basic thing again was so helpful. It was really weird. It was like, imagine you learn how to drive from a bad teacher. You already know how to drive. You can get yourself from A to B, and you'll probably be safe at it. But if you then learn how to drive from a really safe person again from the ground up, you're just going to be better, right? Like, I don't know how to put it in words, but I know that you understand what I'm saying. Apply this to your industry, your workforce, whatever. Like, you learn how to do something the wrong way. You know how to do it, but you learn it the correct hygienic way, and it's just better. And that ended up happening with me. And what I realized when I talk to traders is they sleep on things like the engulfing candle. Like it's so, I've shown you like 4 or 5 instances potentially where this is a very fucking reliable sign of what's going to come in the market with huge moves. I mean, things that you really do want to trade, you really don't want to take advantage of, because you don't want to sleep on these kind of things. And like I said, you can do that risk-free with a huge amount of starting capital from Bybit that you can just throw into the market, which is so cool. People always sleep on these kind of things a lot of the time because they're like, yeah, I'm kind of further down the road than that. But also kind of failing to realize that that's one of the highest ROI things you can possibly do as a trader. When you get inside of VIP, a lot of you guys are going to get the course for free. You're going to see that a lot of it, especially at the beginning, are things that you probably already know, yet you're going to learn it in a way which is going to hopefully be much more hygienic than your current approach, because a lot of us are self-educated. And then when you graduate to the kind of higher difficulty stuff that I go through in the course, the more complex ideas, which, by the way, I've been saying this for a while, but I am re-recording it, and I'm really, really excited for that. You're going to see that actually your development and understanding of these markets gets taken to a whole different level, to the point where like it's a really nice, powerful position to be able to look at any fucking chart in any circumstance and just get it. Like you just understand what's going on. You understand the body language of the market. You understand how to exploit the market legally, normally, whatever. You understand how to keep yourself safe. And one of the key things you're going to understand is when to say, you know what, I don't know, and it doesn't matter. And that's really reassuring, because like a lot of people, they meet me in real life or online or whatever, and they're like, you must be like on those 6 screens all the time. You must be like on your phone all the time. And like they meet me in person. I'm like, literally never. I've never got my head in tech. Like I'm in person, looking the person in the eye, in conversation, chilling, having a good time. And people are like, well, how are you a trader? It's like, well, I don't need to do that kind of thing. Like, I understand what I'm doing. I know what levels exist in the market. I know where the invalidations are. I've got a plan set. I've got alerts, right? I've got a team that's going to message me if anything big is going on anyway. They're going to call me if I need to be called, whatever. Okay, not everybody has that, but the rest of the things I listed, anybody can do. It's free, and because of that, I can just live my life. And isn't that what we want at the end of the day? Like, a lot of people join trading, join this arena as a means to an end in order to get somewhere else. We don't start trading because we're fucking autistic and we just like doing it. I mean, some of you guys are lucky enough to be like that, but that's not me, and that's probably not you. And if that is you, then fair play. You're probably a very, very good trader already. And then what happens is the rest of us, we actually lose that. We get sucked deep into the game, and we start like really gamifying it, and it just gets really excessive and unnecessary, And ultimately, what I'm saying is like, look, there is a way where you can understand this shit and really kind of know what you're doing, and then get back to your daily life and be present fully in whatever else you want to do. And the ideal situation is that you're actually not paying too much attention to the markets. You just kind of let them go. You set your alerts, you set your strategies, you set your trades up, and then you go mind your own business, and the market will give you alerts when you need to come back and give it a little bit of attention, and then you go back to your normal life. And honestly, that's where traders are more successful in my experience. Like when you're just super lax about it, super chill, not like too emotionally invested in this thing. That is where people do tend to perform extremely well in my experience. So a bit of a tangent there, but also very necessary. Again, please do let me know in the comment section if you did find that to be a useful kind of tangent of this video, because I'm super happy to do that. Now, one other thing I want to show you is that oftentimes, and with exceptions like over here and over here, but almost not really, especially not really here, our first weekly red candle within our uptrends, actually with no exceptions then, our first weekly candle which was red within an uptrend. So within an uptrend, when we printed our first weekly red candle, every single time since we bottomed out, that was the beginning of a price or time-based correction, or both. Okay, so over here we printed our first red candle on the weekly, and it triggered a 4-week correction where we declined in price. Over here, same thing. We fell down to my beautiful long entry at 21.5 and then rallied back up. Over here, again, first weekly red candle. Actually, here's another exception. First weekly red candle, not really an exception. We kind of still corrected from here. Downtrend, price drops by like 25%, whatever. Same thing over here. Another weekly red candle within an uptrend, and then bam, we start a correction. Another one, start a correction, and here is another one right now. So again, to me, this is more potential evidence to suggest that we are at the beginning of a correction. If we try and kind of analyze the psychology behind what this means, if we try and actually analyze what this is showing us, then to me, what this is saying is essentially that when the market runs out of steam, it doesn't recover that quickly. That's basically what this is saying, right? Like when the market runs out of steam over here, it takes some time for the market to kind of get ready and get back in gear. Over here, it takes some time for the market to get ready and then carry on. Over here, it takes the market some time to get ready and then carry on. And obviously the same thing here. So that's been one of the key characteristics of this uptrend. My job for you guys on this YouTube channel is to identify those kind of things and then bring them to your attention when I see them. Obviously, I don't need to do that, but obviously we're chilling here on YouTube, so that's what I want to do for you guys. I'm wondering, would it be better for me if I didn't do it? But I actually don't think it makes a big difference. I don't think the channel is big enough to have that effect yet, but help me make that a problem by supporting. That would be beautiful. And yeah, so I think that if we're looking at it from that perspective, we have definitely got a potential beginning of a correction here. And it all lines up, right? Like we've had a really nice big uptrend, correction, a nice big uptrend, beginning of a correction. It just makes sense. So that's what I'm seeing there. Again, one of the key things that is kind of making me a little bit unsure, it's not actually making me unsure, but one of the things that I don't like, which is not lining up with what I'm saying, is that of course on the Binance retail long short ratio, we are still majority short for retail traders. 56% of accounts are short. So that's still quite a lot. It's not that big, and it has actually been declining. If we take a look at this right here, right, like over this month, previously we were, what am I talking about? Since over here, yeah, we were like 60% short, and it has been getting a little bit smaller, 57, stuff like that. Take a look at this, yeah, 62, and it has kind of gotten down and equalized a little bit. So we're still majority short for retail traders, and that obviously does pose some problems, in terms of everybody kind of being a loser, which is one of the key kind of hypotheses that I put forward. It doesn't have to play out all the time, obviously, and that's why I actually made that post in 4Flies Gold, specifically addressing that comment that somebody made, which is right here. This person mentioned you just showed majority shorts doesn't match everyone is bullish, and then I mentioned that it's one data point. It is definitely an important one, but when everything else is stacked against it, I can't reasonably rely on just one data point. And that comment was posted on the 16th of January, and obviously if we kind of look at the market since then, the 16th of February, my bad, I was like 16th of January was a while ago. That was back here where I was giving you guys that warning, and one thing which is extremely clear since the 16th of January is that we have gotten weaker with our uptrend situation here. I mean, just the fact that we're not mustering bounces that stick and that we're stuck down at our support level now is very telling that this thing is potentially struggling a little bit. Now, I do want to touch on the S&P 500. It was forming a bit of a kind of symmetrical triangle, and it still is actually if we just kind of redraw this a little bit. Basically, and these lines don't even matter, but basically what I'm pointing out is that we are starting to see a little bit of, kind of consolidation for the S&P 500 within an existing beautiful big uptrend. So, that's usually telling of, obviously the S&P 500 rising up again, maybe forming something a little bit like this, right? We kind of coil up, bam, get that line, get that breakout, right? So if that's going to happen, then we're basically at the low right now, and we should be ready to kind of bounce up. Let's see how long we've got left. Yeah, we've got like 2.5 hours, so it could still definitely start a recovery, and if that kind of thing does happen, then I would expect some upside for Bitcoin. If we take a look at the dollar has been trending down a little bit, so that this is ready for a bounce, so that's actually a counter sign. Bitcoin's been having a positive correlation with the dollar, so if that positive correlation with the dollar continues, then I would expect that the dollar continues up, and so would Bitcoin. It's all a little bit weird, it doesn't make a whole lot of sense right now, but I'm pointing it out anyway because we're probably going to return back to that status quo in a little bit, and obviously I want to know about it when that does happen. So there you go, ladies and gents. I hope you have enjoyed this video on Bitcoin and what I'm seeing right here. Let's take a quick look at Ethereum, which actually broke $3,000, also in a bit of a downtrend right here, stuck in basically the same position as Bitcoin. Altcoins are getting fucked. Take a look at this, Matic down. It did actually, yeah, nice. It did set a brand new high at $1.02, but down by 10% today. All of our favorite altcoins getting smashed a little bit today. Solana down to 101. Definitely a bit of a red day for these markets here, displaying a lack of confidence, and naturally Bitcoin's dominance rising up a little bit in response to that as well. So that's a whole other video which I'll go into. If you guys would like to see it, let me know in the comment section down below. But with that, ladies and gents, thank you all so much for watching. I'm going to see you all in the next video. If you have enjoyed this one, do me a favor and smash up those likes, tick the bell, do all of that beautiful stuff, subscribe, and of course take advantage of your free $500 Bitcoin position on Bybit and your no KYC beautiful bonuses on Deepcoin as well, which are super cool. Thank you all for watching, ladies and gents. I'll see you all in the next one. Cheers.